Good morning, everybody. We'll be starting with the security laws. We'll try to understand the basics of the security laws. So before starting with security laws, the first thing which you have to know is company law. We have to understand company law. Into company law, the basic topics which you have to understand is prospectus. You have to understand what is known as prospectus. Second one, you have to understand these two chapters. What is share capital and what is debt capital? So if you do these basic fundas of company law, then your security laws will be better. Learning security laws has got two-edged basic advantage. One is for your exams, that's fine, but over a period of time, if you would like to earn certain extra money without spending too much time on it, then security laws are very good. The subject is very narrative, in depth, everything is being given here. So after this, we'll go to what is known as security laws and understand what is this securities law. We'll understand the securities laws. Yesterday only RBI has issued terms and conditions, new terms and conditions regarding masala bonds. You've seen this has come in newspaper. Masala bond terms and conditions have been changed. Any entity which requires or wants to raise money from foreign country and there's a mixture of debt and equity, then that is known, basically debt is in plenty, that is known as masala bonds. The terms, basically the term which is there and the amount to be raised has changed. So this is governed by RBI, Reserve Bank of India. So we are doing securities market, we are understanding the security laws which governs. First one is the primary market, second one is governs the secondary market. There are plenty of markets which we have to do. The next markets which we have to understand is, there's a market what is known as international securities market. We have to understand this. The last topic which is there is money market. These are the markets which are there. Basically, let's understand what this market is. Basically, market is a place where a seller is there. He wants to sell something. There's a buyer who wants to buy something. It may be a normal vegetable market, a fruit market, anything there. So here also there's a market. Understand the basic concept. It becomes easier to know this. So there's a market here. We are doing securities laws. We are doing the market. We are seeing primary market, secondary market, international market, money market. So in this market, only one thing is going to happen. Somebody is going to issue some securities in the market. And that's why I told you at the start, you have to know company law. He may be issuing equity shares, preference shares, bonds, or he might go to international market, raise money through ADR, IDR, FCCB, FCEB. This is how they raise money. So this is a market. So again, now the basic things of a market. We'll understand what is this basic things of a market. Market. Basic things. In a market, there's always a seller. Second one, there is a buyer. Third is there are certain goods. Now we call it as instruments. Instruments. That is to be sold and bought. And always there is what is known as a regulatory authority. There is always a regulatory authority. This is how the market works. So here also in this market, this year 2015 and 16 which has been completed, Indian incorporation raised around about 50,000 crores from the market. This year plan, government plan is to raise, sell of public sector undertakings and raise approximately 60,000 crores government wants to raise. Market is going up and down little bit, so they are worried, but they are in a queue. Many companies, government is going up to 50% down, selling off their stake. Again, you have to know the market. Again, so the basic concept is there's a market, there's a seller, there's a buyer, there's some instrument which is sold. And why do we buy it? We buy vegetables for consumption. We buy fruits for our consumption. Why do we go and buy instruments? We buy instruments because it gives me good dividend, or it gives me good interest, or it gives me capital appreciation. And that is why we go to this market. Now this is the basics of this. So again, company law, you have to know what is a prospectus, how do you raise money, share capital, debt capital. If you know this, then you can understand security laws. It governs primary market, it governs what is known as secondary market. There's an international securities market, there's a money market. Apart from this, we have done what is a market, there's a seller, there's a buyer, there is goods, there's a regulatory authority. Now we'll divide the whole primary market and check what are the contents of the primary markets. Then we'll do the secondary market, then we'll do the international market, we'll do the money market. So basic what is covered in the book, what is there in the chapter, you know it at one go. So this diagram or these pictures, if you know, your chapter should get cleaned out. Okay? Now we start with that. Now, we are doing what is known as a primary market. So let's understand what is this primary market. What is this primary market? In primary market, raise money. If you don't like that word money, you can write down capital. Raise money, capital. It may be a share capital, it may be a debt capital, but you are raising money. How do you raise money? Through issue of instruments, which we call it as securities. Securities. How do you issue this instrument as securities? We are done in company law. Same thing, what is known as through book building procedure. Through book building procedure. And now it is compulsory for, according to SEBI guidelines, you cannot pay cash, you cannot pay check. Now, next thing which has come is compulsory. What is that known as? ASBA. Application supported by blocked amount. This is how in the primary market we raise money. Clear? Yes. So we have to understand the basics. Primary market, if you see, is many people come and raise money. People blindly put in their money there. So why we have to learn the third point? Like I told you the first one, why learn securities, additional income also over a period of time, passing exam is their third one. See, in the recent trends in the market, Kingfisher is gone totally. Vijay Mallya is somewhere in London. Sharda scam is there in West Bengal. Crores of rupees has been lost. Then another person is there in TR jail. There is Subrato Roy. Money is gone. It's people's money. These companies come into the market and raise money. Should I put in money everywhere? Or shall I depend on somebody who is newspaper or some my friend of mine, a broker, somebody giving me a tip or telling me, advising me? No. You have to know your own fundamentals. Then you don't lose money in this market. That is the basic part. Then you don't lose money. And that is why we have to know the procedure. And we are in a better position to understand this because we are doing this whole securities law, the basics. Is that fine? When you come to the final, again you have got in depth all the stories there. So this is the basic raise money through issue of instrument, book building procedure through ASBA. What instruments do I issue? Now I am doing this instruments part. What do I raise through? Issue of equity shares. Equity shares. Just now contest one issue had come. Some issue had come just now, just 1 week before. Oversubscribed. fully oversubscribed. Something after a gap of 6 months, one public issue came and an IPO came. Initial public offering came and it got oversubscribed. So people have money. People are ready to invest. If your product or your instrument is good, people are ready to place their money. Are you getting it? Pune based one company had come. Anybody aware of it who had come with a public issue? Antivirus guys? Quick heal. Their issue had come, it got oversubscribed, it was listed over a period of time. Below the price, at what price they have issued, below the price it went after trading there. So SEBI doesn't say anything about that. And we should be alert enough to know if a company is selling a product, SEBI says that yes, the legal rules have been followed, everything is in order, compliance has been given by a company secretary, due diligence has been conducted, that's what they look after. Whether that product is good or bad, that is not SEBI's problem. And it is your own judgment which you have to take a call on that. It's fine, everybody. Now, equity shares, preference shares are there. You can go for preference shares. Third one, you can go after the preference shares. You can issue what is known as bonus. Bonus shares you can issue. You can issue shares on right basis. Right shares. And if you feel the market is too bad, which market is good? Equity market or debt market? Everything is good. Depends on the current market situation. Are you getting it? Market situation should tell you which is good and bad. When the equity market is falling down, it doesn't give you returns. Debt is always good. But when equity is coming up, leave debt and shift over to equity. So everything is good depending on the time. Then you can raise money through issue of debt instruments. Debt instruments, and that is what is being issued by plenty of public sector undertakings, are issue what is known as bonds. Different bonds. We are not going to the international market. Just 2 minutes before I told you masala bond, the terms and conditions, bonds, debentures. So I commit you a particular rate of interest. Rate of interest is falling. We are expecting RBI to drop the rate of interest again down. So at present, if it still drops, it's easy to raise money. But there's a commitment of paying a particular interest. There's a commitment of giving certain securities. And that is very important. Yeah? Like if you have read the newspaper, Jindal Steel and some DLF, somebody has assured the public sector, don't declare as a willful defaulter. We will give our land to you. We will sell it and give you the money. So time has now come and the government is doing the action to protect investors. Here, Vijay Mallya's today's news is there. Vijay Mallya is now ready to pay. Instead of 3,000, he is going to go to 6,000 crores. Yeah, they are hunting and checking out all this thing. So over a period of time, who has to be protected? Why this SEBI has been born? To protect your interest. That is the investor's interest. This is the primary market. This is how we raise money. Is that fine, everybody? Now, a small thing into this is, we'll check how do we raise money. So we'll check in how do we raise money. A small book building procedure we'll check. How do we raise? And then we'll go to the intermediaries which are involved here. So in the primary market, if you check is, first one is the company. First one, the company should be a public limited company. That is why I told you basics of company law has to be known. Then only it can raise. Afterwards, the company wants to raise. It has to prepare what is known as a prospectus. It has to prepare a prospectus. And into this, the types we have done, red herring prospectus, am I right? Red herring prospectus you have got. Second one you have got, pardon? Shelf prospectus. Shelf prospectus. Yes, abridged prospectus. Fourth one, anything? Umbrella prospectus. Different prospectus. What is a prospectus? Prospectus is nothing but an invitation given by the company asking you or inviting you to subscribe to their share capital or debt capital. That is prospectus. So always it is written, read the prospectus carefully and then place your money. How many of us read the prospectus? Nobody reads. Even if we read, do we understand into this? No. So we are in a better position to tell people, I can read a prospectus and tell you whether to go ahead with this or not. So we issue prospectus. After the prospectus has been made, we have to go to SEBI, Security Exchange Board of India, SEBI, and SEBI will do vetting of the documents. Vetting of documents they will do. After vetting of documents has been done by SEBI, then they'll give you a consent letter that yes, you have agreed, and that consent letter is valid for a particular period. Because you get it sanctioned somewhere in 2015 and you come out with the publication in 2016. Within that time frame, what happens is 1 year has passed, financial position changes drastically. Every quarterly the positions are changing. So it is valid for a particular period. And then they give their consent, and once they give their consent, you can come out with what is known as public issue. And that is what we call it as initial public offering. You can come out with it. We do it by book building method. Now we'll go ahead and check this. We are doing it through book building method. Book building, nothing to do with that building and anything there. Book building is a process by which red herring prospectus we have written down there. I will give you the base price and I won't give you the higher price, and that is red herring. Something which is incomplete. Okay, always we have seen in a square bracket, got a black dot there. That is known as red herring. It's an incomplete prospectus. Before the issue opens, it is complete. Clear? Here, we'll give you in this what is known as a price band. We give you here what is known as a price band. What is this price band? Lower portion, if you take it is 200 rupees. This is example, rupees. 200. You decide. SEBI doesn't decide this. Then 20% above it. So that comes to 240. Am I right? 240 rupees. This is the price band. And in this price band, you can apply, and whatever, if Mr. X feels the price of the shares are rupees only 200, I will buy it for 200, he can buy it. Y feels no, I am ready to pay rupees 220, he can pay. And something Z feels that 240 is the right amount, he can pay extra. Is that fine? Always when you are taking these figures and everything, always know rupees 10 or below is the face value. And remaining rupees, in this case it is 190 rupees, is what is known as the premium. That is the premium. That is how you have to apply. Once you apply, how do you apply into this? You have to fill in a form. Standard form is there, you have to fill in. Then you have to attach with it ASBA, application supported by blocked amount. Once you attach this to this, then you have to submit it to the banker. And then we'll go to what is known as allotment and check how allotment is done. Allotment is done with the help of book runner, lead manager, registrar and transfer agent, plus company representative in accordance with SEBI guidelines. They do the allotment. Okay? Now when you do the allotment, how does it work out to be? Allotment has to be done on proportionate basis. proportionate basis it is being done. Clear? Then, whatever the application you are given with this ASBA, what is allotted shares to you, that much amount is claimed. Amount is claimed by company, claimed by company, by company. So what happens if you pay 1 lakh through ASBA and you've been allotted shares worth 50,000 only? So the company has issued this will claim 50,000 through ASBA, and 1 lakh was in your account only. So out of that 50,000 I take, remaining 50 is still in your bank account, made as an FD, so you earn interest on it. That's the basic idea, is you earn interest on it. So they claim there, and then we do what is known as allotment of securities. Allotment of securities we do. When you do the allotment of securities, how does this work out to? Allotment of security first is done, is given to NSDL or CDSL. NSDL फिर बाद में DP को देता है, depository participation, identification number, it goes to DP. After it goes to DP, depository participant, then it is credited into client demat account. It's credited into a client's demat account. So you got your shares. If ASBA में refund का सवाल आता नहीं है, ASBA में refund का सवाल आता नहीं है. But still, now it's been made compulsory. But earlier we'll try to understand if you are paid by check. If you are earlier paid by check, before that we used to accept cash also there. So if you are paid by check or by cash, earlier things, then we'll take excess amount. This goes to the banker. The banker will through ECS will credit it into investors savings account. Did you get that? So you got your shares, you got your money refund. Again, ASBA is there, so the question of refund does not come in. Earlier this question used to come. Slowly this is going out. Normally credit. Is that fine? Credited into the account. And then after that, it is done as what is known as listing of securities. Listing is done on the stock exchange. You have to list your shares at least on one national stock exchange which has got terminals all over India. So you got a choice, either BSE or NSE. Many companies prefer both the things because they have got nationwide terminals. Regional stock exchanges are becoming dead. Okay, Bangalore Stock Exchange is gone, then Pune Stock Exchange is gone, slowly this stock, because the technology is gone, so NSE and BSE has got nationwide terminals, so you can do trading. So this is the first part. It may be a bond, it may be equity shares. This is how companies raise money. Second, this market is good. Little bit we'll try to run. This whole market, primary market, tells you how your economy is also running. It's an indicator of the economy. If everybody is coming to the market and raising money, he doesn't raise money just like that. He must be having some demand there. He must be having certain demand for his product. Like today, there's a news there, Baleno, this Maruti Suzuki's car is there. Waiting period is 18 months. My God. Company starters have gone down, these have gone down, sabka dhanda niche ja raha hai. But Baleno's got 18 months waiting period. If they increase the production and they reduce it from 18 months to 8 months and 10 months, because people will cancel otherwise that. If they reduce from 18 months to 8 months, etc., I have to have a new line of manufacturing. If I have to have a new line of manufacturing, I need money. Means companies come into market only when they have got lot of orders with them, they want to expand everything because they have got orders. And this is an indication that the economy is running good. So understand why stock market, it's an economic indicator how the nation is running. And when they raise money, they have to apply towards the object. Prospectus, whatever the object has been given, you have to apply for it. Clear, everybody? Getting it? Now, another changes, small changes which SEBI has done over a period in prospectus. They made changes into this. Earlier, we used to raise money. I'll tell you for this I'll tell you many purposes for which I'll raise money. I'll raise the money. Over a period of time, I'll use that money to clear off my debt also there. I'll change my objects of the company a little bit, or I'll amend it, rectify it, alter it, something, and park that funds there. No, you cannot do that. Now, if you raise money and people have paid money, that money has to be used for the objectives which has been specified. If you change your objectives, then you have to raise a separate money, but this money may not be used for your changed objectives. You see how proactive SEBI is being there to protect the investors. So this is how they're trying to protect. This is the whole of the primary market. If the primary market is good enough, then what happens is people are giving their money, and one expectancy is always there: capital appreciation. So there is a difference again here between an investor and a trader. Always know that. Trader is a person normally who feels that, okay, I put in money today, 1, 2 days, 5 days, 10 days, it goes up, it appreciates, I sell, I get my money back. Okay, there are a lot of ads, etc. showing is you sow a seed, then water it over a period of time, then one day a big, huge tree comes out there. Shown in that? Yes, it's shown. What is this? Do investment. Don't go into trading, investment. Invest today. Wait for a few years. The time frame will differ from instrument to instrument, company to company. Those are seen companies like ICICI Bank or Infosys. ICICI Bank earlier, long back when it got listed, its price was only 42 rupees. HDFC Bank was somewhere around 50, 52 rupees. Check the prices today. Yes, it took time. Any business, when it starts, it takes time for it to grow. Means after interaction with that SEBI official, like somebody had told, many of you were there that time, people park their funds into the primary market, and when next day whenever it is listed, it doesn't appreciate. People take a morcha on SEBI. What can SEBI do? That poor guy has not removed his money from the escrow account. पैसा निकाला रहेगा तो भी पार्क करके उसका धंधा करके पैसा कमाने को टाइम मांगता है. People feel I park my money here and next day it should grow enough there. So this takes a lot of time. Is everybody getting this primary market? Now we'll check what is there in the secondary market. Now, in the secondary market, we'll check what is a secondary market, how does it work out to be. Secondary market. How does a secondary market work? If the primary market, whatever the money is raised or instruments which have been issued, its trading takes place in secondary market. So trading should take place like this. Secondary market trading should take place. So you have to know what is meant by stock exchange. Stock exchanges. You should know a stock exchange. You should know what is the stock exchanges. How does it work? Stock exchanges. You should know the intermediaries of secondary market. Third one, you will have to know whenever you issue prospectus, in the prospectus it is written very clearly that we will be listing our securities. Listing of securities is written there. So you are aware that it will be listed on some stock exchange. So tomorrow, if I require money, I can sell the securities and get my money with appreciation. So listing, always know, whenever you issue instruments in the market, if it is equity, you have to be listed. Clear? Basics of company law there. Clear? Debt instruments, they are also listed, but some companies come out with debt instrument where they provide security. We have got a DTD, we have got DRR there. In this case, they are not listed on stock exchange, but at a certain time frame or a time period, they do redemption of that securities. Means if the company says, oh, I want my debenture back, take your money, give me back. You say, no, I don't want to continue with the debenture. Then give your debenture back, take the money from him. It's a two-way process. Clear? Rate of interest is dropping now. Debentures which has been issued by companies at 11 and 12% are doing very nice in the market. Capital appreciation is there. Rate of interest is still falling. And those companies in 2013-14 were issued debentures for 5 years, 7 years with a tag of 11 and 12%, their debentures are doing very good into the market. Clear? So market falling and you still receiving interest at a higher rate. So this is what you have to know, stock exchange intermediaries. Now, stock exchanges secondary market is, it's nothing but a trading platform is there. There's a trading platform. There's a trading platform where there are sellers and buyers, where there are sellers and buyers. They buy and sell goods. There's still many people into, you don't do it directly there, so there are intermediaries. We'll be seeing all these intermediaries. We'll put it like our normal style, here primary, here secondary. Then we will check out what are the intermediaries. Who are these intermediaries? Simple word, like in Contract Act, which you have done, agents. But these are professional people who have been registered with SEBI, with the NISM, they have passed their examinations, and then they have become what is known as intermediaries. There are different exams for different intermediaries. Can I have all the licenses with me? Yes, absolutely. You can have all the licenses and practice all also. Clear? So through them you have to do what is known as trading. Directly nobody can do the trading. Some concepts are there is, yes, I can buy and sell shares. No. Directly you cannot buy. There's a .com company or somebody through whom it is routed into the market. Because tomorrow you sell something or buy something, who will take the guarantee that he will pay or deliver his shares? So there's an intermediary who has to be there. .com companies only give you a facilitation process through which, through their network, you log in into the stock exchange, buy or sell something, but their network is aware what you are buying, selling, they are counting it. If they want to stop you anytime, they can stop you anytime. And there's a guarantee there. They got a power of attorney of your savings account, they got a power of attorney of your demat account, everything there. So they are taking their own precautionary measures. So trading, if primary market is good, secondary market is good. So both go together. And every day when you read newspapers, etc., there, or you see something like that, Bloomberg, or you see any other channel, you have got ET Now, Economic Times Now, which you see all the prices which are moving up and down. You see the different graphs which they are showing. Even if the movement of the graph is to check the amount which is done. Maybe it is something like 75 rupees has gone to 78. Graph में बहुत बड़ा दिखता है, but it's moved only 2 rupees that day. So that is the graphs you have to understand. That is known as a trend line. Trend line. And then in the end of the day, they show either it is dropping down, there's an arrow going downwards or an arrow going upwards. How does this been done? At the end of the day, between 3 to 3:30, no trading there, settlement takes place. During that time period, how much demand for that shares is there and how much sellers are there? Always there has to be a big mismatch. If the buyers are more and sellers are less, it's but natural next day it should go up. But if the sellers are more and buyers are less, naturally next day the sellers are still going to be there. The market for that particular share has to go down. Are you getting it what I'm saying? Yeah. Now we'll understand both the intermediaries in between. Then we'll understand the international market also. Okay, we split it as usual. This is security market. We divide it into two parts. This is primary market. Here we understand secondary market. Primary market, the main job is to raise capital. To raise capital. We have done this, and that is through issue of prospectus and through what is known as book building. Am I right? Issue of prospectus and book building method. And then we do what is known as the last one is allotment of securities. This is the last thing which comes in here. And the terminologies which we have done here is, which we have to know is ASBA. Application supported by blocked amount. When you go into the secondary market, here you have to know is listing agreement is there. Always know there's a listing agreement, now it has become a listing regulation. Listing regulations. It was an agreement earlier between the company and a stock exchange. SEBI has changed it, now it is listing regulation. It has become a law there. So there has been terms and conditions are definite, certain. Listing regulation. You abide by the listing regulations, your shares or whatever security, shares, security is listed. What is the exact meaning of listed? Your name is not there in the stock exchange for trading. We'll take a small example like a vegetable market. You're selling something like purple color cabbage. Is there in the market. Purple color. Every day we sell green. I want to sell purple. It's not there in the market. So I tell them I want to sell. So people come and say, oh, new, purple. How does it taste? Is it good? Shall we buy it? So, similarly, first your shares were not traded. People were not aware of you. Only in the primary market, people knew you raised money. And when it gets listed, people know, iska bhi trading hota hai. So I can buy these shares and sell these shares. In the primary market, when you applied, you did not receive the shares. You can buy it from the market. If you got an allotment here in the primary market and it appreciates, you can sell it. Both the ways are there. You applied, you got it. Over a period of time, you can sell. I did not get it. Then what did I do? I bought it here. So both of them go together. So shares are listed, and then what starts into this is basically is trading. Trading starts, trading. Now, what is exactly, how does this trading work out to be? Bank holidays, stock exchanges are closed. Okay? Monday to Friday it works. 9 o'clock stock exchange opens. 9 to 9:15 you can place orders. You can place orders. आज मुझे दुकान में कभी गए, when we say, we take a chit with us sometimes and tell that guy, ये हमको मांगता है, तो वो लिख के लेता है. What do you want? Write down everything. So that's an order. So before the shop opens, if he takes the orders, before the shop opens, he can arrange everything and give it to you. So 9 to 9:15 you can place order. 9:15 trading starts, where it is open for everybody, not only to place order, to buy and sell. It continues up to 3 o'clock, 3 to 3:30. Either you buy and sell what you have done the whole day, and settlement has to be done till 3:30. This is how the stock exchange works, Monday to Friday. Saturday, Sunday, or other national holidays, etc. the stock exchange. Why it is closed? That also there's a reason there. when you buy something, I have to pay money. आज खरीदा और 2-3 दिन 4 दिन बैंक बंद रहे थे. Just now the banks were closed for a few days. And the guy who sold his securities, he'll get his money too late. There's no trading activity during that time. So banks, you understand how the banks and stock exchanges are linked together? Because all transaction, your money, everything is going through the bank. So bank holidays, stock exchanges shut down. This is how trading is being done. Now, trading karte samay, sometimes we take example, we'll take TCS. Then we'll take Bajaj Auto Limited. TCS. How the share movement is there, we'll see the trend line. We'll understand how the movement takes place. We'll understand this. TCS this quarter has declared that we have got 2 new clients. And US market is doing good because maximum exposure is to the US market. So after this announcement, it's but natural that their bottom line, the income will increase. Are you getting it? The income. So there will be a demand for TCS. The demand for TCS is that naturally the prices will go up. Did you get how this is reflected? Depends your results, what you're performing, if you've got new export orders, or you're depending on one country for exports and that country is doing good, then your company is doing good. Then we'll take Bajaj Auto. Bajaj Auto has come with some vehicle which is made from that Vikrant, whatever that, we had an INS Vikrant, which had a carrier plane, sea carrier was there. They made it out of that. Then an Avenger there. And then they got a Boxer some model which is going for exports. And they're doing good. And if the sales is up, naturally the share price should go up. That is the moment how it takes. Then we'll take our typical example as KFA, Kingfisher Airlines. It's come down to 1 rupee. It was doing good, it came down. What happened is, license got cancelled, license was cancelled. There was a strike. All these factors put together saw the share prices went down. You had plenty of examples like this, like Bhushan Steels went down. Bhushan Steel also, there was a problem there. It also went down. SR went down. So negative news regarding your income, your directors, anything, your product can pull the share price down. Positive news, something you're doing good, exports are doing good, your company is doing good, everything, then it can raise, it can go up. Is everybody getting this? How the movement takes place. And movement to take place, if you answer this little bit, you have to know the economics. Just now they are saying, and check it out, it will happen, that there's a drought, severe drought in Maharashtra. If there's a severe drought in Maharashtra there, then how many people are living in that area? How many industries are there into that area? They don't have that much, you can say, surplus money to buy or invest somewhere. They don't have surplus money to buy goods. Water is a serious problem. So the demand for maybe FMCG goods or other goods will decrease. If it decreases, the income of the company goes down. So a little bit of economics, how the population is spread, demographic change kaisa hai, population kya hai, in cities how white goods are sold, in rural areas FMCG, how to do the business, and according to that the movement takes place. That is primary and secondary market. Now the next one into this is both this market, this primary market and secondary market. There's one person who is head here is SEBI, Security Exchange Board of India Limited. At present, UK Sinha is the chairman there. He has been given an extension also. If you checked it, he has been given an extension because the market worldwide is going bad. So you need a person who is there for years together. So he has been extension period has been given. SEBI. What does SEBI do into this? So we'll understand this both the ways. SEBI here will do the first job is first he does vetting of prospectus. He does vetting of prospectus. He does vetting of prospectus. Okay, this side. Clear? Second one into this is, let's check is, he does appointment of intermediaries. He does appointment of intermediaries. Again, intermediaries in the primary market are different and intermediaries in the secondary market are different. Appointment of intermediaries. Next one into this is, if you check, SEBI is a regulatory authority. Being a regulatory authority, so you have to file returns with him. He can do inspection and he can issue orders against you also in case of anything violation takes place. SEBI has got this authority. The last one into this is, SEBI issues guidelines. Issues guidelines required for the market. This is how the chapters are there. Primary market, secondary market, the basic thing is covered in SEBI. So your company, if you work as a company secretary in any of the companies and they are going for a public issue, like Quick Heal went for a public issue, whoever the ex was a company secretary. Nice experience because there are plenty of, I am not written on the intermediates, I will be writing it down here. Intermediates, you have to interact with the book runner, lead manager. You have to know who to appoint a registrar and transfer agent, brokers. All your papers have been filed or not properly. Get a consent from SEBI. Then 3 days, 5 days, the issue is open. Is it successful there? After successful, allotment has to be done. After allotment, listing. So the whole experience you get. If your company is a private limited and going for a public issue, you'll have a very, very good experience and you'll be interacting with all the intermediaries. So this is how the securities market. Here in the primary market, like I told you, is you have got BRLM, book runner, lead manager. You know, the assistant to that, you can have co-book runner, lead manager. Second one, you can have registrar and transfer agent. Then you can have bankers. Then you can have brokers. You can have underwriters. Secondary market, how to invest and when to invest, how do you do that? The secondary market. In the secondary market, you can have what is known as stock exchange brokers. These are different brokers. Then you can have portfolio management services, PMS. They render portfolio management services. Then here you can have what is known as a portfolio, you can have what is known as sub-brokers also. So everywhere intermediaries are there. You can practice as an intermediary also. A lot of businesses there, this market is growing rapidly. Earlier, if you have seen, is there are very few securities which were listed on the stock exchange. We have got more than 5,000 securities which are listed. At present, there are very few public issues coming, but another maybe 2016 gets fag-end, or 2016 and 17. You may find companies, all companies in India raising at least 80,000 crores from the market. And this is how they'll have to move. Primary market, get everything sanctioned from SEBI, vetting of prospectus, open an intermediary, book runner, lead manager does. We have got a full chapter on book runner, intermediaries. So this is one chapter. Secondary market, वही chapter में secondary market का intermediaries रहता है. So this is the primary market. In the primary market, then you got a chapter on SEBI, Security Exchange Board of India Limited. Where is the head office? Then what is Securities Appellate Tribunal? That comes under the SEBI. Then if you go after this, the secondary market, where you have got what is known as a stock exchange functions. Then you have got small things which is there is, different types of shares are there. You got a, what is known as hybrid part. You got pure instruments, you got hybrid instruments. Then you have to know what is closing, what is opening of that market. So this is the secondary market. With examples, we are seeing how trading takes place. Getting this? Now we'll check the different institutions which are there, which facilitate the investor in investments. So we'll go to credit rating agencies and check credit rating agencies. Now, we got a chapter known as credit rating agencies. CRA, credit rating agency. The first credit rating agency in India was CRISIL. Internationally, we have got rating agencies which were very old enough, and that was S&P, Standard and Poor. And the next one was Moody's. This is international credit rating agency. They do ratings right from the company to the sovereign part. Right, means the nation. If you want Maharashtra government to do that, they'll do the rating of Maharashtra government. They'll do of India. And if they do a rating of India which is positive, what does it happen? Money from other countries, right from investment, will start flowing into India. So just now if you've seen is the IMF head, that lady, French lady, she said the whole world economy is doing bad, but India's economy is doing good. So everywhere in US, Europe, everywhere there's a surplus money. They want higher returns. And if your economy is doing good, all the foreign exchange investments and FDI, everything will be coming into India. So I told you there's a time frame there. One day nothing grows. 2016-17, you'll find growth coming heavily in India because it's the only country in the world just now who is doing economically good enough. Clear? Getting this? So Standard and Poor, CRISIL, they do ratings of company. Whenever you issue a debt or instrument, you have to get a rating done. You got an IPO grading also. So we'll check this. So CRISIL, you got CARE, you got ICRA. These are rating agencies in India. Okay, what ratings they do? They do ratings of debt instruments. Debt instruments they do rating. It's compulsory to be done. Debt ratings has to be done there. What is a rating? It's just an indicator to tell you how the company is performing. Once a rating has been done, that doesn't mean lifelong the rating will be there with that company. We have to check this. And ratings is being done, debt instruments, ratings will be given. Then you have something in IPO grading also. IPO grading. We'll check this, how IPO grading and debt instruments rating is being done. Debt instrument rating, this one is done like in alphabets, AAA, triple plus. Highest rating there. If you don't want that additional plus, you can remove this and just say AAA. Then you can go for AA, single A, triple B. Like this the rating comes in. And the rating is never permanent. Every quarter, half yearly, when your finances change, this has to change. Clear? And IPO grading is done in alphabets. This is done in alphabets A, B, C, D. In alphabets, it's been done. 1, 2, 3, 4, 5. Okay? 1, 2, 3, 4. Like this, it has been done. IPO grading. Clear? Again, understand there's a disclaimer clause in every prospectus. We see the financial fundamentals and then give the ratings. But you have to take your own judgment, your own risk, and then invest into this. Clear? So that's the basic part there. Now, ratings have been done. Now, when the ratings have been done, they have been given. So this is basically whatever we have done is for companies. Companies which raise debt capital from market. Debt capital. What about the ratings of individuals? If you see in advertisements, a man goes to some bank or something there to take a housing loan. He's sitting in the queue. And when the manager comes, he says, I've got what is known as a CIBIL rating. So he says, you come first inside. So Credit Information Bureau of India Limited has been formed, where they do ratings for individuals only. They do it for individuals. So you can apply to CIBIL. When you start working, you got money, you are taking some loans or anything there, you can apply to CIBIL and know your ratings. Or whenever you apply to a bank for a loan, they take one more form filled in from you. You have to pay some amount, maybe 50 rupees to 250. The fee is different. And your name is registered with CIBIL. If you default on your credit card, you default on your housing loan, you default anywhere, that bank informs CIBIL immediately. Then what happens is, you go to another bank to take a loan, they get a confirmation, this guy has taken a loan from anywhere, and if the other bank informs CIBIL that this guy is applied for me for a loan, CIBIL will immediately tell, oh, from X banks 2 years ago he has taken a loan, he has defaulted there. So the next bank will not give you a loan. Earlier it used to happen like this, I go to some bank in this lane, take a loan, the same bank has got a branch in the next lane. I default here, go to the next branch in the next lane, take a loan, default there also. Both the branches in the same bank were not aware of anything. Now this awareness is there, default rate, if you checked everywhere, if you are reading newspaper, even Supreme Court has asked, why not you tell us how much is the exactly non-performing assets? Names, etc. disclosure, Supreme Court will not ask, no, but Supreme Court has got a list with them. If something like in total all banks put together, if you are having non-performing asset and weighing off something like 28,000 to 30,000 crores in a year, it's your and my money. Kingfisher ko gaya hai, Malay has run away. When you and me should be worried, because you and me have kept money in Punjab National Bank, in State Bank of India as a deposit or as a savings account, and that man takes money. And if he defaults, the profit will reduce, or you can go into negative also. Means indirectly your money is harmed. So a serious way is now being taken on the default. So you have to know credit rating agency. And how does a credit rating agency work? One by one we'll check this. How does it work out? This company applies to me and tells I want a credit rating. He tells I'm going up with a debenture issue. Okay, so we make an agreement, then I make a team of my staff, I send a team to them. They have to give access to their books of accounts, all all the working papers, etc., whatever they are doing. So my team will analyze what product they are making, how many competitors they have got, what is the profit and loss account, in what manner are they working, in which geographic area they are working, and all factors put together, I will decide a credit rating. So I will decide it is only single A. So my committee and my company will tell this board or whatever committee they are formed, oh, yeah, we have analyzed all the factors, there are plenty of factors we are taking into consideration, these are our working papers, and this is the rating allotted to you, A. Company is not satisfied. Then the company tells, no, we are not satisfied by it. Then he gives me a feedback. Your view, your perception, my perception of the risk and everything, So we discuss these things, he clarifies on plenty of points, then I do a revision of my rating and I then bring it to double A. Then I give it that, now he is satisfied. So if he comes out tomorrow with the fixed deposits, he comes out with what is known as a debenture issue, he has to show, I've given him double A, that he has to disclose on the front page that rating has been done. Rating will never remain constant. I give him today, maybe after 6 months, 1 year, etc., his business, because of dumping by some goods by certain countries, business goes down. So till his debenture is I, as a credit rating agency, as per the agreement made between both of us, I have got an authority to do 6 months, 1 year rating of this person. This is according to SEBI guidelines. So next year, I tell his rating is A only. Again, after that 1 year, etc., or 6 months, he's still doing bad. I pull him down to double B or single B, I go down. So rating can go down, and if he's doing good, rating can go up also. People only know one thing, investors and everything, rating deta hai, and that is permanent. It's never permanent, it changes. And can I tell always to him like this? Yes, we can do it on this basis. So this is credit ratings. Now, small thing we'll check is mutual fund, and then we'll go to the international market. Yeah, mutual fund works like this. We'll draw that part and check it. First, there are a lot of investors here. Lot of investors. Approximately, we'll take the imaginary figures. There's 1 lakh investors. Everybody contributes only 10,000. Huge amount. Huge amount. Why did they contribute towards this? We'll come to that chart. Then they park their funds, park their money into what is known as mutual fund. Mutual fund. म्यूचुअल फंड में पैसा डाल दिया उन्होंने. म्यूचुअल फंड वाला क्या करता है? नाउ दिस म्यूचुअल फंड इज दैट वी टेक इनटू दिस. It is HDFC mutual fund, top 200. They invest into this, top 200. What they do is, there's a fund manager here. There's a fund manager here. He is a knowledgeable person, he understands the market very well. He does all the money received in the top 200 shares, he does investment. Shares, he does investments. Okay? He does investment. Your money, lump sum he has taken. So, yeah, check this. There's 1 lakh people, 10,000 everybody is getting, he's invested into this. That time when he did the investment, the index Sensex was running at 18,000. After 1 year, the Sensex is running round about at 25,000. Did your money grow? Did the investment grow? Yes. So when the investment grows, when the investment has grown, he can declare what is known as dividend. He can declare what is known as dividend because it is appreciated, and this dividend is given to the investors. These investors who are there, they get the dividend. So what happens in a mutual fund basically is the risk is spread over. You do not invest in one script. आपने तो 10,000 ही इन्वेस्ट किया है और कंपनी ने बहुत शेयर्स खरीदा है. If it falls, your risk is less because the hit to you will be less. If it appreciates, it will be less. But anyway, that person is a knowledgeable person and he knows how to buy and sell shares. This is how a mutual fund works. We'll see the basics of the mutual fund working. Now, In a mutual fund, there is always a sponsorer. Sponsorer is there. Then you have to form a trust. You have to form a trust. It comes under the Trust Act. And the trust appoints, what is this? AMC, Asset Management Company. So if you take a sponsor like this is just an example. If you take HDFC, main, non-banking, they got what is known as an HDFC trust. They are formed. It comes under the Trust Act, and AMC comes under the company law. So trust gives you a guideline. Asset is to be managed by this company. Trust form different schemes. For different schemes, they may have same AMC or they have different AMCs. Sponsorer, trust to be formed, and that's why mutual funds do not buy their own properties, because I gave you money to invest into the market. I did not give you money to buy an office or to buy a land or anything there, unless it's a real estate mutual fund or anything there. So every mutual fund, whoever has got an office, it's not their own office. Either their sponsor has bought it, okay, and then give it on lease to the trust. This is always on a lease basis. Clear? And the expenses which are incurred, I've got so much of stuff with me. I've got a license fee to be paid. I've got a lease fee to be paid. Everything is deducted, like I told you, when a dividend is declared, before dividend is declared, everything is deducted from there, and then a dividend is declared. So, in a nutshell, when you give your money, because I don't have the knowledge, I don't have the time to invest, I don't understand the market. So I give a lump sum to a mutual fund. On my behalf, lakhs of people, they invest in the stock market. When it appreciates, they sell. Brokerage charge hoega. I kept so many shares for the last 2 years. Demat charges आएगा. आपके लिए स्टाफ रखा था दिखने के लिए, उसका चार्जेस आएगा. Am I right? I'm putting a big hall like this, then I got all the ACs, everything working, उसका चार्ज आएगा. जो बचेगा उसमें से मैं dividend declare. I need not pay the whole as dividend. I'll declare, and remaining will be reinvested. This is in a nutshell how a mutual fund works. Then there is one concept which people like. Okay. You can do this in the normal stock market also. Systematic Investment Plan, SIP. You can invest in HDFC Mutual Fund or ICICI or Axis, everything there, and tell that fund manager that every month 1,000 from my account should go towards the fund. Means April में 1,000 गया, सेंसेक्स कितना था, मई में कितना था, जून में था, तो आप 12 महीने 1,000 रुपये डाल रहे. So you're putting 1,000 for the next 12 months. And one of the person says, why should I put 1,000? He invests directly 12,000 in March. You understand the benefit of Mr. X, the first guy. Every month he invests 1,000. So Sensex differs that time, so he gets at that rate the units. Mutual fund is always designated or in units, so he get that much units. And 1,000 invested, he gets unit. Unit के ऊपर dividend declare किया, ऐसा करके he gets for 12 months. While the second guy, Mr. Y, he invests directly 12, he doesn't get that much benefit. So systematic investment plan is always good. You can invest. It doesn't pinch your pocket because 1,000 goes every month. You get the price correction, whatever is there, you get the benefit of it. This you can do it in mutual fund. This is there in the book, SIP, Systematic Investment Plan. You can do it in a mutual fund. Can I do it in 2-3 mutual fund? Agreed. So I say 500 goes to HDFC Mutual Fund, top 200, remaining goes to 500 goes to Axis, और 500 रुपये ICICI fund को जाता है, कोठारी pioneer में जा सकता है. You can do like that. Investment. And mutual fund gives you returns, etc. after a time period. Don't imagine today you invest and tomorrow you will get returns. It takes time for this. A span of 2-3 years is minimum required. Like this, if you don't like mutual funds or you have got knowledge of the market, then do it the other way. We'll use this terminology. SIP, every month or whatever you want, every month or every quarter, half yearly, whatever into this. You can do one thing is, you can invest in shares. Like, if I like Axis Bank, every month 10,000 or 5,000 I'm doing. क्या rate रहेगा आज खरीद लेगा Axis Bank. Next month में लेगा. But what happens is systematically, even if you invest 5 and 10,000 per month, you get something like 1,20,000 in a year. And that too in Axis Bank at different rates. पहले का rate 200 था, last का rate 300 था. Every month you purchase. I'm taking a normal pricing. Say averaging what is your cost is 250 because you have bought at 200, you have bought at 300 also. 250 is the average price. And if the share prices go above this, then you benefit. So you can do a systematic investment. For this, one serious thing is, you should understand the market. You should know what stock you are buying. Should have time period. ये सब अपने पास पैसा है, अक्ल नहीं है, समझता नहीं है, लेकिन स्टॉक में इन्वेस्ट करने का रहता है, तो go for mutual fund. They do on your behalf, and उनका charge उसके ऊपर लगेगा. Nobody is going to do free of cost. So they're going to have a charge on this. Getting this mutual? Two things. The last one which we will do is, we'll understand the international market. Now we'll check the international market. Now, international market we are understanding. When you want to raise capital, always you have got a choice, domestic or international market. Domestic, we have seen till now domestic market. Many times it so happens regarding takeover, mergers and amalgamation, like Tata Steel had bought that time Course, now it's selling it off. Because decisions are taken, maybe that time it was a correct decision, over a period of time it failed. So they're selling Chorus, some assets they're selling off. That time they took over Jaguar and Land Rover also. That time it was running bad, Jaguar and Land Rover, but they are doing good. So two decisions taken, one went right, absolutely, and one is going wrong. So they're selling. But that time we have to raise money from the international market. Okay. When you go to an international market, these are the instruments which are there, one by one. One is you can issue through GDR. Next one is ADR. Next one is, this is debt FCCB. The last one is FCEB. And if you want to take a loan or anything there, then it is external commercial borrowing, ECB. These are the instruments which you have to know. GDR, ADR, FCCB, FCEB, external commercial borrowings. Now, into this, basically is, you have to know what is two-way fungibility. Then we'll do, if required, we'll do what is known as sponsored ADR. What is two-way fungibility? Same example. We go to a bank, we got 1,000 rupees brand new currency notes. We give it to him, it's 1 lakh, he deposits into your bank account. After 2-3 days, you again go to the bank and say, I want my 1 lakh back. You can withdraw the money, your own money. But will he give you the same currency notes? Will he give you in the same denominations? No. He may give you in 500, he may give you in 1,000. And even if he gives you in the same denomination, he cannot give you the same currency notes. Clear every? Now into this, basically under fungibility means change. So what did that guy give you? He gave you 1 lakh again back to you, but he did not give you in the same denominations. The same currency note he never gives you back. Clear? So fungibility, two-way fungibility we are trying to know into this. That is fungibility. Two-way fungibility means both the ways. Can an ADR be converted into IDR, Indian Deposit Receipt, IDR into ADR, ADR into GDR? Yes, conversion from one instrument to another. Another one into this is a depository receipt. It's not a share. Depository receipt. What is a depository receipt? Every depository receipt has underlying certain shares, which is with the domestic custodian. And on all. So what is traded in NASDAQ or what is traded in Luxembourg Stock Exchange are depository receipts and not shares. So if you're staying in States, you're working there, you have a green card there, you're working there, everything there, you could buy ADR of Infosys, Wipro, Reliance, HDFC, you can buy there. Maybe after a few years you decide, no, I'll settle back in India. You can put up an application. There's a big lengthy procedure there. You can put up an application there and do fungibility. So what will I do? I'll convert my Infosys ADR into Infosys shares. So when I settle in India, can I sell the Infosys shares on Bombay Stock Exchange? Yes, that's the reason why we have this deposit. Raising money abroad has two advantages. One is you can raise money in international currency, because to buy a company outside, you require something from an international currency. You can't raise money in India, ask RBI to convert it. It's a big lengthy procedure and then pay. So raise money abroad, pay abroad. Tata Motors raised something like 117 million USD and paid to that Daewoo company, and then it's known as Tata Daewoo company there. They start producing used trucks. So that is basically a two-way fungibility. This is depository receipt. What is sponsored ADR? Normal ADR is like this, that we issue depository receipts, means the share capital increases. While in a sponsored ADR, I'm doing in a nutshell here. So sponsored ADR means I tell my existing shareholders, if you're able to give me your shares, give it to me. I'll convert it into depository receipt and sell it into the international market. Whatever money I get with normal deductions, I'll give it to them. Means indirectly what happened? Two things. Indian shareholders hold his shares in international market. Company को क्या फायदा होगा? Shareholding pattern change. That is sponsored ADR. There's a huge process which we have drawn, and that process basically has to be known. Now what is FCCB and FCEB? Foreign currency convertible bonds. FC foreign currency exchangeable bonds. Convertible bond means it's like a debenture I raise into international market, it gets converted into Indian shares over a period of time. Exchangeable bonds. X company issues FCEB, and when it matures, it doesn't get converted into X company shares. It's got a subsidiary Y. And he says, I will convert your debentures into my subsidiary company Y shares. So that is known as exchangeable bonds. So that's also possible. You can convert in your, we don't have till today, but there's no issue. Why can't we have? We'll have something like this. I got a bond, 10 rupees. 5 I'll convert into my shares and 5 I'll convert into FCEB. So you can have a combination of this also coming over it. Just now we have got separate things coming in the market, but over a period of time, it can be combined and you can have two things at one time. And this external commercial borrowing is we raise money. It's a loan. For this, FEMA also has to be known. It's an automatic route, up-roll route. We raise money from the international market. So that's the domestic market, the primary market, the secondary market. You got a mutual fund there, you got ratings there, you got alternate investment funds there. You got plenty of intermediaries we have to know. Then you got an international market. The last one is money market. Till here, everything, the regulatory authority is SEBI. And for money market, it is Reserve Bank of India. So in a nutshell, we'll do that. The last one is money market. Money market. Here the regulatory authority in money market is Reserve Bank of India. So whenever you study, segregate this. Do domestic market first, finish it all. Then do international market. Even if the chapters in between somewhere money market comes, and do money market at the end. You segregate so it becomes easy to learn. Reserve Bank of India. So there are very few players or investors in this market. Because the instruments which they issue are, you can have what is known as G-Sec, government security, you can have T-bills, you can have commercial paper. These are the instruments which are there. Who are the basic players who come here and invest? They are always the domestic financial institutions, the banks. Why the banks are interested in this? To maintain cash reserve ratios. Okay, they have to maintain CRR there, and one more thing, SLR, statutory liquidity ratio, to be maintained. They are normally investors in this market. You got a table for that T-bill. Every Wednesday, Friday, how much issues are there on, and RBI raises this money not for itself. You see, advertisements are there in economic times. T-bills, etc., the 500 crores, 1000 crore, whatever into this is there. Government of Maharashtra, 400 crores, Government of Gujarat. And they auction it that day, and they raise money like this. RBI raises money for central government and state government. So this is a money market. Money market is a volatile market. You have to understand plenty how the forex market works, how the money market works. There's a debate in between. There's a lot of money in the market, printed money. So the RBI said there's no money too much in the market. What has happened is people who had invested in real estate or in gold, they sold it very fast because the market went down, did not know where to invest again. So that money is floating in the market at present. When the economy grows, there's a scarcity of money because everybody is investing somewhere. So at present there is no avenue of getting much return. So there is money floating into the market. It is all governed by Reserve Bank of India. And money market is a huge topic where you know how the financial institutions raise money, how the banks raise money, issue of T-bills, government securities, and always when RBI issues this bill, there's a guarantee by Reserve Bank of India. It's 100% safe, and there's no ratings, etc., done into this. Fine, everybody? Anything still? Getting in a nutshell, what is the securities market? Just a fast track in a nutshell. What's the whole? If you are able to do this, like I told you in the morning also, 5 hours, 6 hours, if you are able to finish this, next day it's possible to appear for another paper. And writing skills are required. Your presentation style should change. Write, and write. I've been telling you, you feel I know everything, you write much, and the confidence level is very good. Institute is always wrong. I wrote properly. Institute gives wrong marks. They don't know how to correct my paper. So all that problems will not come if your writing skills are once checked. Stop here today. Thank you.